Welcome to a special edition of Market Pulse from Equifax, where we break down what's shaping the mortgage industry today and what happens next.
Hi, I'm Clayton Collins, CEO of HousingWire, and we're here at MBA Annual 2025 in Las Vegas, Nevada, at the Equifax podcast booth here in the Expo Hall. And I'm joined by Rikard Bandebo, the Chief Strategy Officer and Chief Economist at VantageScore. Rikard, thanks for joining me.
I'm delighted to be here, Clayton.
All right. Credit scoring, credit reporting, incredibly active and important topics in 2025. In July of this year, FHFA Director Bill Pulte made an announcement that Fannie Mae and Freddie Mac would begin accepting VantageScore. Tell us about what the last several months have meant for you since that announcement.
I mean, it's been very, very positive for us. You know, we are big fans of competition and innovation in the mortgage space. We think it's going to be really, really good for the industry and for consumers. And it's good, I think, to see, the 2018 Credit Reporting Act being put in place. So, no, very positive.
All right, let's go deeper on the topic of competition. So what does competition look like in the past? What do you think it's going to look like in the future? Let's go deeper on that topic.
Well, I mean, in the past, there hasn't been competition, right? Through sort of happenstance of fate, there's been only one score that's been allowed to be used for mortgages. And that score has been there since even before the last recession. Some of these scores go back to the 90s. So it's a system that has been around a very long time. It's a system that the Federal Reserve found failed in 2008. They found that actually the score was a big issue at that time, but hasn't yet been changed. So for the integrity of the system, and also just to enable the millions of consumers that have been left behind by the current scoring system who actually are creditworthy and should be able to have a house, we think this is really positive.
Is the millions of consumers that have been left behind a conversation that you have with lenders and other stakeholders in the housing market?
Every day. I think this is what excites them the most, right? Because this is, a house is one of the most important things that people buy in their lives. It's also the biggest ability that people have to create generational wealth. So from a consumer perspective and from an organizational perspective, it's a really big deal. And when lenders see an opportunity, particularly when the housing market's pretty tough, to be able to lend to more people without increasing risk, that excites them.
So from your point of view, what are the characteristics or strategic elements of VantageScore that help open that credit box and make houses and housing more accessible?
So there are a few things. The legacy score has some restrictions on it, which exclude tens of millions of US consumers, right? Because VantageScore 4 uses up to 24 months of history, it's able to then actually build a much more accurate profile and score people that would otherwise not have been scored. Also, it uses rental data, utilities data, and other data that can give really good insights into how a person will perform on a mortgage. I mean, at the end of the day, think about it, right? The rent check is probably the biggest outlay people have on an ongoing basis, right? So if you're trying to understand how they'll perform on a mortgage, seeing how they did on rent is an absolute winner.
I mean, so rent is probably the most important element for first-time home ownership. Do you believe an ecosystem where rent and VantageScore is used for mortgage underwriting that like first-time homeowners have a new advantage, or we open the box for first-time homeownership to expand faster?
With VantageScore, about 5 million more households should just be eligible to get a mortgage in the new system, okay? That's before you add rental data. With rental data, there should be many, many more consumers who should be able to be either eligible for a conforming mortgage or be eligible for better pricing.
What does a housing market look like when 5,000 new borrowers are eligible? We've talked for years about constrained supply, and I know there's different, you're a chief economist as well, so you may have a theory on where we are in the supply-demand equilibrium, but with 5 million more eligible borrowers, does that create a more competitive housing market where home prices get driven up, or is there a different, a different element that happens there?
It's a great question. The reality is where we see most of these people that have been left behind by the current system, they tend to be actually in rural areas or in areas that have traditionally been high rental areas where there hasn't been much demand for buying housing, right? And so that could actually be very, very beneficial for those communities. It can help drive the economy in those communities and create a better wealth system in those communities.
Yeah, I mean, we always talk about a national housing market, but we know it's a collection of hundreds or thousands of local markets, which all have different dynamics. I mean, I've seen a lot of supply and demand analysis by market in the U.S. and markets like Austin are performing very different from markets in the Midwest, where supply has actually been a little bit tighter.
Yeah, or for instance, when we look at VantageScore and some of the states where there's the biggest ability to score more people, West Virginia tops that state with over 20% of the population of West Virginia not scored under the current model that would be scored under VantageScore 4.
Okay, so since Director Pulte came out with the announcement that Fannie and Freddie would start accepting VantageScore, there's been debate, there's been different viewpoints, and there's been misunderstanding. What do you think the mortgage market has misunderstood about VantageScore and what Fannie and Freddie accepting VantageScore might mean for them?
It's a change in a system that hasn't changed for over 30 years.
Yeah.
So it's always going to be quite hard for people to understand exactly how that's going to happen. But the good thing is, we're seeing such appetite from the large mortgage originators, from the CRAs and resellers, from the insurance companies. So there's a huge appetite to get this going. Everybody believes in this competition, and everybody believes we'll be able to score more people. I think where some of the confusion lies is, unfortunately, like in many things these days, there's a lot of misinformation out there. And so we do our best to try to correct that. But I think what people should do is to look at the independent sources, right? Look at whether it's the investment banks that have done analysis on the different scores and written reports on it, or like people like JP Morgan Chase or Bank of America or Bloomberg. Go to those sources, yep. Right? You know that they're relatively independent when it comes to this
sources,
types of
but not the sources that loan originators or consumers are going to be visiting. I mean, I get all the equity analyst reports, but they're not widely distributed.
No, that's true. But I think for a consumer, most consumers, when they look at their own credit score, VantageScore is the score that they're most likely to see.
Okay.
Right? So we were a pioneer in consumer display, and for the past 15 years or so, where we've seen that whole consumer display market increase, we've been by far the most used score in that area. So it's not an alien concept to them. Whether they go to Credit Karma, whether they go to Chase or wherever to look at their credit score, it's a score that they see on a regular basis.
Okay, so I definitely see the potential for consumer impact and industry impact. You talked about the CRAs and resellers. How does adoption of VantageScore impact them? Is there opportunity? Is there threat? Give us a view there.
Well, they've already put the pipes in. So
okay.
We're delighted that the industry is so ready, and they're already passing VantageScore 4 through to their originators, and they're working with us. We're also partnering really closely to ensure that there's a really good simulator that can be put in place so that consumers can be helped to figure out what steps they need to take and what will have the biggest impact so that they can get ready for that mortgage.
Okay, so if the pipes are in place with the CRAs and resellers, what about with the originators themselves? Is there work to be done, within their own four walls of the large originators to prepare their operations for VantageScore?
I mean, the large ones have gone back, they've done their homework, they've back tested and looked at all their historic data to understand how VantageScore 4 will look like on their own portfolios. So the big one's already there.
Okay.
And what I would say is that for those that are kind of the next step down, haven't quite done this yet, we definitely recommend that you do this, because at the end of the day, if you don't, your competitor is, and they're going to be able to get more customers than you. So I think that's a pretty big deal.
All right, so the big ones have done the work and have tested and analyzed back data. What about the smaller lenders? Is that a dynamic that they've been prepared for?
We're seeing a mixed bag there. We see several particularly those that are more mission focused, who see, being able to open up home ownership to more communities as part of how they work. They're really getting behind this. But then there are others who are waiting to see what the big guys are going to do, and then they'll probably follow suit once they've seen the successful implementation at some of the bigger agencies.
So when I talk to originators, they all want to serve more consumers and do more loans, but they're also price sensitive. At a report level. And so what does VantageScore mean for originators who are concerned about the price they pay for credit data?
Over this past week, we've seen all the 3 national credit reporting agencies come out and publish what their planned pricing is for VantageScore. And they've also put out several deals to provide a lot more easy access to those that are using the legacy score. So we think that is great. We think that they have heard what Pulte is looking for, and they've responded in kind. And now we're actually seeing real competition, because remember, up to this point, we've seen the price of these scores go from near 30 cents to now $10 next year. I mean, that's not a small increase over a very short period of time. So again, I think that having another score there, one particularly that is more competitive, is going to be great, and it's probably going to help a lot in the end for the cost that the consumer and the originators are going to have to bear.
Okay, so you mentioned the three bureau partners. Can you tell us a little more about the relationship between the bureaus, VantageScore, kind of how decisioning and pricing works out?
Certainly. So we are an independent organization, but we are co-owned by the three national credit reporting agencies, Equifax, Experian, and TransUnion.
Yes.
Okay, and so it's been a great partnership. They actually created us for the purpose of creating a competition in this space. So, it's been great. We've had huge success in credit card, personal loans, auto, but until this point, until Pulte came out with that tweet in July, we've been kind of kept out of mortgage. So for now, it's the first time we're able to compete in mortgage, and that's fantastic. But no, it's a great partnership, and it's enabled us to really differentiate, to provide models that if each bureau has the same information on the file, then you get the same score for each bureau. And that's quite unique and really valuable as you're issuing mortgages.
Yeah, that definitely does sound like a valuable, and consistent data there. You mentioned that the speed of innovation, may be a risk, but it does also feels like the speed of innovation is something that's helping create change. Do you think that the introduction of competition in the market should slow down a little bit, or do you think we're running at the right pace?
I think it has taken a phenomenal amount of time to get to where we are today.
Yes.
Right? I think it took less time to get people on the moon than it's taken to get the credit scoring market and mortgage to change. Right? So that's some perspective. So the reality is, it is good to have change. It's good to have innovation. It's good to run at a decent pace. Right? But you've also got to remember that the consequences of getting it wrong. I mean, this is people's lives. This is about them getting a mortgage, right? This is a very important step. You really want to make sure that before you push that button or before you issue that loan, that everything is working the way it should. Yep. If it doesn't, the ramifications, can be quite painful.
Do you think that means that lenders will put in place some guardrails in the early days of new model adoption to make sure they're not opening their institutions up for risk? Or do you think there's just different origination shops will take totally different approaches to their appetite for risk or appetite for how wide the credit box is?
Well, I mean, the good thing is, right, VantageScore 4 has been available going back to 2017. Yep. It's used widely. It's the most used score in credit card. It's used in personal loans, auto loans. So it has a long history of being successfully used and implemented in other areas, right? And also, we've published the data on the historical data sets from the GSEs. So there's been a lot of tire kicking. So I don't think they see as much risk on that side of the house. I think, though, the cogs in the machine not turning the way they should, that's probably another risk, and that's probably the one with these different changes that might be more heightened for them.
The process and implementation risk?
Yeah.
Yeah, absolutely. All right, so I saw your press release this morning, and online adoption of lenders using VantageScore or signing up for the portal has been stratospheric in the last few months. Tell us a little bit more about that.
Well, it's great. As you know, obviously, we're seeing a lot of the large originators starting to pull VantageScore in now as they're preparing for the transition. We've seen a lot of focused lenders doing the same thing. As I mentioned, those that are focused on a mission. And we're also seeing those that don't just go to the GSEs, but perhaps submit loans to the VA or to the FHFA loan banks, have been beginning to pull our score so that they can begin preparing their loans for those types of securitizations as well.
Okay, so we have an opportunity here and a platform to go kind of one-on-one conversation that's listened to and watched by many. I'm sure at MBA you're having lots of conversations with lenders and clients and partners. What are some of the harder questions you're getting that you need to answer to bring confidence to all these people that are still kind of scratching their heads about what the future of credit reporting looks like?
A lot of people are a little bit, when change happens, that there's a level of anxiety that kicks in.
It's funny, for an industry that changes frequently, we don't like change very much.
Well, I mean, again, when you've had something that's run the same way for a long time, which was probably implemented way before you even started working at that organization, right, where that historical knowledge of implementing it the last time is gone, there's always going to be some aspects of that are going to make people think like, whoa, are we ready for this, right? But the good thing is, all the tools are there, the bureaus are there to provide their support. So once you start putting the foot in, I think everybody's getting very comfortable with the support and with all the information that's available to ensure that they can make the right decision.
All right, so we've talked a lot about VantageScore through the lens of mortgage, but let's talk about other lending verticals where VantageScore has had adoption and found traction. Give us a glimpse into that, Rikard.
Yeah, so VantageScore 4 was launched in 2017. So we have quite a long track record of that being available. And actually, as of now, we are the most used credit score in the United States, much because of its adoption in other products like credit cards, auto loans, and personal loans. And we now have over 3,700 financial institutions that are actively using VantageScore today.
So you mentioned 3,700 institutions that have adopted. Can you give us an example of a large lender that's adopted VantageScore and found success?
Yeah, so probably one of the best known is Synchrony, which is the old GE Capital.
Yes, absolutely.
And so they adopted VantageScore 4 for everything they do. And for them, they found it to be a great success. It helped them reduce the risk they had in making and issuing their retail cards, personal loans, and other types of products. And so what they did, which is very clever, was that not only did they adopt it, but they're also using it for securitization. And so they had a very clever process where what they did was that they told the financial markets, hey, for a year, we're going to show you both scores. So you can begin and adapt and understand how these scores work. But then after these 4 quarters, we're turning it off. And that worked really, really well. And it started to get the investment markets more familiar with VantageScore 4 and how to use it.
All right, so the KPI of success in that world was measuring risk. On the origination front, there are any other KPIs that lenders like Synchrony use to say VantageScore has been a success?
Absolutely, and you can see that in their quarterly earnings announcements, how many more consumers they've been able to lend to as a result of switching to VantageScore 4 without increasing risk. In fact, they're able to lend to more people and they've reduced risk at the same time.
Okay, so shifting back over to mortgage, do you have any advice or what would you tell originators to do now if they're interested in comparing their current credit reporting strategy to VantageScore or making the first step to this competitive future?
I would definitely encourage them to reach out to their credit bureaus. VantageScore actually offers a customized report to help mortgage originators understand what the increase in addressable market would be were they to switch to VantageScore based on their footprint. So that can help them get an understanding of the financial impact of making the switch.
So that's interesting. So like the go-to-market is fueled by their existing credit bureau partner, not directly through VantageScore?
No, it's fueled on the originator's footprint.
Okay.
So if they're, for instance, an originator in Wisconsin, we can then pull what is going to be the increased addressable market for them based on their footprint in the different counties of Wisconsin.
All right, that makes a lot of sense. Well, Rikard, I can't thank you enough for taking time away from this busy event and this busy expo hall to have this conversation with me. It's been a pleasure. Thank you, sir.
It's been delightful. Thank you.
The information and opinions provided in this podcast are intended as general guidance only and are subject to change without notice. The views presented during the podcast are those of the presenter as of the date this podcast was recorded and do not necessarily reflect official positions of Equifax. Investor analysts should direct inquiries using the Contact Us box on the Investor Relations section at Equifax.com.